Hello, 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 everybody. Welcome to my show today. I'm Crypto Kyle, aka the Mystical Prophet, and I'm excited and nervous to be here with you as this is my very first our live session, and I'm looking forward to being able to share my knowledge with you very firsthand. We'll start by telling you a little bit about myself. I used to work in a warehouse running day-to-day operations and trying to optimize businesses. I wasn't very happy. I felt stuck working the Monday to Friday 9 to 5 job. When I met my wife 5 years ago, she was already working virtually, and I wanted to do the same so we could travel together and be financially free from the 9 to 5 job. When I got laid off, her success allowed me to take my time and explore different virtual income possibilities, and I eventually landed on the cryptocurrency space. At the start, I did have some success right off the bat, and I got excited and was full of energy, but I lost it just as quick, and I come to realize that I wasn't really that good at all. I would be zoomed into the 1 minute chart, thinking every green candle was the next big move, and I was losing money faster than I put in. That made me realize that I needed to get some education behind me if I ever wanted to have success and to be profitable in the trading industry, as I truly enjoyed like analyzing the charts and digging into them every day. So I invested into a crypto academy actually, where I spent 8.5 hours each day watching webinars, taking courses, and learning from crypto educators. The charts really never left my side. I'd bring it to bed with me day and night. I was wake up early in the morning, just eager to get back onto them. I learned strategies, terminology, and different trading styles over the past couple of years doing this. And over the past few years, I've traded most of the different trading styles, and each of them has their own sets and pros and cons. It is also very important to invest in mindset training. I can't preach that enough. Crypto isn't for everyone. There is a lot of volatility in this space, and as you probably feel right now, there's a lot of fear in the market. And despite the fear, you have to be confident in your work and your trading. So now, before we move on, here I want to give you a disclaimer. I am not a financial advisor. I am not a professionally certified individual or part of a trading investment corporation. The information I share here is purely what I have learned over several years of education, winning in the market and also losing in the market. It comes from practice, spending 24/7 around the charts, listening to people who are smarter than me until I was able to anticipate what the moves would be ahead of time on my own. I'm not making anyone enter trades, just sharing my analysis and take on the market and my own personal choices. If you enter any trades, you are doing so at your own free will. Crypto is volatile and changes day by day. Don't put your money in that you're not afraid to lose. Today, I really just wanted to spend some time to talk about market psychology itself and a little bit of the mindset training tools that I use, and just to give you my own personal market analysis at the end. At the end, we'll mark up the charts a little bit. Because the market can be volatile and not always do what you're expecting, it is important to have a good mindset and be strong. Some of the daily things that I do every day before I start trading is I do meditation and breath work. In the morning, we've switched to an organic kind of lifestyle. So we're eating better, and I'm not taking in so much processed foods. And it's really important to get out and release all your built up energy and stress through exercise. If I do get emotional or my trades aren't going my way and my headspace isn't right, I don't trade anymore that day. You kind of put it away and take your loss and come back the next day with a clean head and ready to go again. Reading is very important too. I used to never read, but now recently in the last couple of years, as I've dug into this mindset stuff and how powerful it is, I've really come a liking to reading. And one of my favorite books that really helps me out is called Trading in the Zone by Mark Douglas. Master the market with confidence, discipline, and a winning attitude. It really helped me transition into getting into the proper headspace to become a successful trader. I have two educators that talk about market psychology consistently to me during my trainings and webinars, and they've had their own course models on it too. It can be an emotional roller coaster. As you can see here, the psychology of a market cycle, this is shown to everybody, and it's known by everybody in the Wall Street and everything. It's called the Wall Street cheat sheet. And in it kind of shows how the market cycles work and how people's emotions kind of go through a cycle. You start with, it starts going up and you're happy and you're in hope. You breaks up even higher. You're optimistic. This rally is real. You know, there's belief. You're actually believing it, and it's time to get fully invested. You're throwing more money in. You know, you're super excited at the thrill. You're almost 3/4 of the way up, but you're just keep buying more because you think it's going to go up forever. By the time you're in the euphoria state and you're a genius, we call that everybody's a genius stage. And that's when you're telling everybody, all your friends and everything, to get in it, and you're not too late. It's going up to the moon. And next thing you know, you have a big pullback down, and you're just like, oh, you're going to be okay. It's complacency starts to kick in. We just need the market to cool off, and before the next rally. The next thing you know, it drops down lower. Anxiety starts to kick in. Why am I getting margin calls? This dip is taking longer than expected. It goes down below your entry points. Everybody's in denial. My investments are with good companies. They're going to come back. You have that belief. And then the panic line hits. The market keeps crashing. It gives no pullbacks up and no chances to get out at a higher price. And you're deflating that you need to get out. Everybody's selling. Everybody's panicking. And then there's contemplation. I'm getting out 100% of the markets. I can't lose no more. Then you see the market kind of start to chop around at the bottom again, and you're wondering who shorted the market, why did the government allow this, and you're mad at everything. You don't understand what's going on, and at the end here, like it starts going up. You start to see you've lost your retirement money. You're depressed. How can you pay for all this new stuff? You're such an idiot. And the thing just starts right back over. It starts to go up again, and you're in disbelief. This is a sucker's rally. And it continues to go, and say if you're great caught back in again, you're going to go through that whole hope, optimism, belief, thrill, euphoria, complacency, anxiety, denial, panic, anger, depression, and disbelief again. This happens in every single market, and crypto is extremely volatile and is a really good example of this. Another thing too that we are taught kind of by my educators and stuff is to observe the opposites of the masses and do the complete opposite. So when the media is pumping out all this fear and telling you that it's going to die and everything else, there's people making money off this. All the higher end class, the elites, they know this game. They're part of it. They're buying up all your fear right now, and you're supposed to observe the masses and do the complete opposite. Another way we say it is you buy the fear and sell the greed, and you try to keep your emotions in check if you can. So we're gonna start digging into the charts a little bit. As you can see, BTC right now is currently at 30,600. We dropped as low as 28,970 this morning. I don't expect it to be having too many candle closures down by 30K or below 30K. That's a huge level of support, and honestly, close like the bottoms that we had from last summer. So I'm going to just hop onto a new chart here, and we'll just start marking it up. I'll start up at the weekly time frame and the monthly time frame, and we'll just see where the charts are at right now. Look here. On the monthly time frame, there's not too much data to be able to use in the past. Price hasn't been up here too much, only last summer. Down here, sorry. So if we could put up some lines here, just start creating some lines of confluence. Make that one white. Big, because we're on the monthly. Another one, there's this one as your high kind of monthly close. So essentially right now too, like even though we're down below this line on the month, there's still 20 days left before this thing. You can see it rally down to the lows of 28,878 before, and it pumped back up and it held at 34,850, 35,000 mark essentially by the end of the month. So I'm still anticipating it for it to pump up above that level before the end of the month. Another notable line that we can look at is right here. put that as white as well, nice and big. As you can see here, it rallied above, came back and tested it as support with this little wick candle here, and then came back up, broke down, tested it, dropped down, broke through, up, and then came back to test it. And as you can see, it plays off this level. So 47,150 is definitely a key level of resistance as well at this point. It'll be very bullish if we can get up above that. We'll move down now. We start breaking it down to, say, a weekly time frame. We can start to create some more support and resistance. On a weekly time frame, we'll be looking for it to be closing no less than this line. We'll make that just a little bit smaller, the 3 size. So in 4 days and 8 hours, by Sunday, I don't expect it to be any lower than 31,820. We haven't had any weekly candle closures that low. And on a weekly level, we'll be looking for a candle closure higher than 65,474 for it to be really ready to blow its top off. Other than that, you got this level we can mark up if you wanted. Got this, you can see tap there, tapped here, dropped below, came back up to try to test the bottom of it, got rejected, came above, it held on top, went up. So we can see that that is a key level of support and resistance as well. Go down to the daily time frame and start marking up a little bit more data. Right now, essentially the stuff above, I'm not too worried about. We'll start marking up kind of like where our entry and why I thought that this could potentially be the bottom. As you can see here on previous data that has been printed on the graph from last summer, we did come down and test 29.5. We went as high as 4,600, and then we started to create like a bullish wedge, it's called, where price just keeps kind of going down, 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 down until it can't go no more and it breaks up. So another key level to be looking at is this is the lowest daily candle closure right here. So we'll put that as, that's a very key level to be watching. So we'll make that one, say, we'll go green and smaller, 2 point. So we don't want no daily candle closures below the green line. As you can see right now, if we go back and analyze that data now, we have no daily closures below 29,950. Now I don't anticipate any daily closures below that. We could get some more wicks, as we call them, where the candle goes and price will drop for X amount of time. But a candle closure is the full solid box. So that is essentially like, say, we're looking at the daily time frame right now. At the end of the day, in 7 hours and 40 minutes, wherever this candle closes, that's what we call like a candle closure. And you can use that on all different time frames. You can switch from time frames up here in TradingView, up where the D is, and you can use multiple different time frames. And we'll just slowly be working our way down. And so, yeah, I don't expect no daily candle closures below that right now. If you look at a daily level 2, you got this 35,000 is going to be our next really level that we're going to come up and test, and we want to break above. Okay, the absolute low that it's put in over here was right here. So that is very important. Usually a rule of thumb when it does come down like this is it's a good risk reward to put your stops just below the lowest point. We'll make that one red. Big. Now you can see back here, it came down a little bit lower and everything, but you got this one candle here that shows support and resistance. So if we do end up like wicking down for a day or so, this could be the ultimate like lowest that it might quickly shoot down to 28,475. So as you can see, over the course of the last year and a half, the market has been ranging up to about 65,000. And then we've been ranging going all the way down to 30,000. So you can see there's the market's kind of been trending in between this range. Lately, the past since essentially since the start of November, we've been in a downward trend, essentially is what it's called. So it's just continually prices been going down. We're looking for the market to pretty much do a market reversal and hopefully hold these bottom levels. So one point I just want to pull out, I did get lots of us in and invested at 35,000. I just want to show you how there was a lot of support and resistance at this level. So there was a chance that this could have made a higher high here, and that was all we got, and away we go. I'm taking a little bit of a loss right now, or just holding on and having diamond hands, it's called. But until we start closing like daily 4-hour candle closures, even I would say underneath 29,500, I'm not worried. We'll go back down now. We'll move down to the 4-hour and see what we can see, if we can see any new data or previous. So once again, we'll go back and look at the last year's data and see if we can take anything from that, so we can use it on our price action right now. So once again, you look to see where the lowest 4-hour candle closure is, and that's pretty much there, I think. Right here. It's your lowest 4-hour candle closure. You can see the blue and the full blue candle doesn't go any lower. So that's going to be our 4-hour timeline that we're looking for no candle closures below this dashed line. And that is 29,572. So we'll go back now. We'll kind of look at maybe some expectations about where the market could potentially be going in the coming weeks, and where are some key levels of resistance to be watching out for. As you see, as we scroll down to the 4-hour time frame, you see these lines actually like get a little bit more defined, and you can see them how the price bounces above it, tries to hold, goes below, doesn't reject, tries again, and then it finally falls. Same thing, goes up, doesn't hold, and comes back, tests it, comes back down to test the lows. We're just looking for a higher low now to be put in, essentially. So if we can, over today, kind of hold this area and break above here and start having these candle closures, 4-hour candle closures above that, that will be our very good sign. And then we'll want it to hold 31,800 pretty much essentially after that for our ride up to 35K. The next couple of days, it's just going to be, you're going to see lots of movement up and down, because a lot of people are in fear right now and they're selling. The average day buyer is panicking and selling, while all your big corporations right now are just buying it up. They're buying millions and millions and hundreds of millions of Bitcoin daily right now at these levels, because they know where the market's going to be going. So we'll go from our last, say, high point. We can start to pull out our Fibonacci tool and go high point to low point, and you can start marking up some zones to watch for some rejection. You can use the 50 to 618 zone. It's a good zone, first area to be watching. And then 786 to 886 retracement is usually another your second level to watch. Now, I'll go more into Fibonacci and a lot of these tools that I use separately on individual videos. Right now, I just kind of wanted to go through a bunch of the tools that I do use at a quick kind of rate. So right now, this leads up to 38,500. There's a lot of resistance, so that's kind of confluence with the other lines around the area. You're looking at bigger time frames. we can start to look for where this thing could potentially go. So once again, these are going to be our first two zones of interest. We go from this high point all the way to this low point. You'll see here's our 786 to 886 zone. And here is our 50 to 618 on the macro level. Macro just means essentially at a higher time frame, a bigger time frame, the bigger picture. So areas of resistance we'll be looking for. This is actually the 3-2 part area as well. So you can look at 38,700 as your area for resistance, 42,500 to 45, and then this area as well. Put that back. Another tool that we use this Fibonacci for fib extensions to know exactly, hey, so if the market breaks above, how far can we potentially go? Lines to keep in mind are your 1.618, your 2.618, and your 3.618. Another key line to be looking at is your 2.272. Usually when we get the big, we will get a push up and we get higher than your last previous high. Price starts to rally up and go up above. Usually it'll break above the 618 and get to the 272, and then it'll come back to test the 1618. So we'll be looking for something like this. Go up, and then you'll look for a 3-wave correction essentially, which would probably look something like this. Test these old highs back down at 65,000 before we progress up to the next stage. Somewhat like this from this point then. And then look for your next push up. That's at a macro level. That's way longer in the picture. But if we do get the breakout that I'm anticipating this week, and we start to break above 35K, that's gonna get everybody starting to get excited again and rally back in. If we can literally hold this level over here, so do something like break up, test, hold this area, that would be extremely bullish. Test these lows in between those. If those hold as support, then we'll be looking for a pump back up like this. A couple of the other tools that I use here under your indicators is your exponential moving average. So when I put that in, you just put in EMA if you want. You'll see moving average exponential. You can click on that. That is this blue line. It shows up. What I like to do is over here under your EMA settings, I go to settings, I switch it to white so you can see it, and I thicken it. Inputs I put for my exponential moving average is length 50. So what that means is this is your average. That prices, like what prices mean, the average of the last 50 candles. So the white line will just give you an average of the time frame of the last 50 candles, and usually price will always run away from that line and come back. When it gets too far, you see it'll start trending on the line, it'll run away from it, it comes back and tests it, runs away, comes back to test it, tries to get above, doesn't hold, runs away from it again. tries the other way, you'll see it always comes back to that white line. So it's a very good tool to utilize for when you're looking for trend reversals. We go down to, like, say, the 4-hour here, right? We've been trending essentially below it since 47,000. This gets really like, I use this as a key to when I'm looking for entries into the market. You can go down even to, like, say, you can see here on a 1-hour time frame, it's rejecting off it still. So as soon as we get a pull above this white line and up above 31.8, it should start to try to form a trend reversal and try to get on top of that and right on top of the line is essentially what we're waiting for. On a time frame here, last night we were right about here. We had a good push off of 33,000 again. It would be really nice right now during this drop right now if we could hold this level right here. That white box, if we can just hold that and push up, that'll be the first kind of sign of a trend reversal. But right now, there's so much fear in the market right now. We could be wicking down here, pumping up, but you see how volatile this is. Within an hour, it goes from 31.5 down to 29.4, and then the next hour, it's literally back up to 31.8. People are buying hard at this level. I wouldn't advise to sell. We just kind of hold it out and ride it out and see how it goes. Another tool that I like to use is the RSI, it's called, the relative strength indicator. And this is a momentum indicator. This will show price. Price will oscillate essentially from the top of the momentum to the bottom of the momentum, top to bottom. Let's see if I can reset this. So if you can see here on the 1-hour time frame, you got some divergence, it's called, happening right now, where price continues to go down. You can see there, price is going down. Well, momentum on the indicator says it's going up. We're making more momentum swings, more momentum swings. So this is called RSI divergence, where price is going down, but momentum is telling you it's going to go up. So this is a tool that I use to just help pinpoint my entries and to see the shift of momentum. $15. So we can just zoom in here. Maybe we'll watch it here for a few minutes and see if we can get a reaction off of this zone. It would be really good if we can get that. Like I said, we shouldn't have any more candle closures below these two red lines. And wicks, where that's the little white part of the line, price shouldn't really go down any lower than 28,520 to 28,250. And if it does, like I said, everything under 30,000 should just be eaten up until it finally breaks out. If we go back and look at previous data from last year, you'll see how at this level it just got eaten up. The computer's a little slow today. So last summer when we were at this level, you can see anything below 31,800 was really just getting eaten up. Price drops anywhere below that, boom, big reaction, boom, big reaction, boom, big reaction, until it's coiling up until there's no more selling. Everybody's pretty much sold and is panicked and everything. And when there's no more sellers in the market, the buyers step in. And what happens? Right at that point, the market literally went from and it did in one day. Yeah, one day it went up 10%, 3,000 pips. You look here, in less than in 2 weeks, 11 days, it went up 12,000 pips. You know, the thing will start to go crazy and ballistic once it starts to go. Anyways, I will be giving you live updates and keeping you up to date with what's going on. We just need to be really patient right now. Let the bottom be put in and let the sellers kind of wear out. And we should be seeing a really good push in getting out of the red here in the coming weeks. If you have any questions, feel free to reach out to me. And it was a pleasure doing this, my very first live with you.